Hey, welcome, guys. It is Thursday evening, September the 25th, in preparation for Friday, September 26th trading day, coming into the last couple days of this month's trading. Been quite actually a few opportunities the last week or so here. But we'll jump into the markets here in just a moment and kind of go over some of the stuff that's played out here. But for right now, let's continue on with a page or two of the Roy Longstreet's viewpoint of a commodity trader. All right, weather markets. A small group of oil scholars met at the ranch over the weekend. An outstanding contribution was made by Armand Lachio of the Weather Corporation of America. In essence, he told us that forecasts of weather beyond a few days are not reliable. Temperature forecasts are more reliable than our forecast of moisture. Sometimes it is more difficult to forecast moisture for the next 6 hours than to forecast temperature and rain for the next 3 days. There are times when a forecast of rain is more reliable than at other times. Pardon me. Sometimes the degree of certainty approaches 100%, but it never reaches 100% until after it has happened. The fact that someone has been able to forecast weather accurately once does not mean that he can do it every time. Given the same conditions, he can probably duplicate his performance, but the conditions are seldom the same. All of the above facts means to yours truly that the weather markets are mercurial, extreme in price fluctuations, very difficult for the trader to master. Let's change pages here. I am intrigued with the possibility of quick, sustainable profit opportunities on those rare occasions when a qualified weather forecaster can predict rain with a high degree of certainty, particularly when the market is vulnerable. That's to me that jumps out. I think we've all had those days where we're all on the same page, everybody's predicting the same thing, and we've talked about those are the times to hit and strike while the fire's hot, and that's what's happened the last couple days here. So that's been good to capitalize on some of that. For those of you who were not able to trade, that's okay. There are other opportunities coming right around the corner. All right, pliability. I have found that rigidity is one sure way to lose time and money in commodities. In commodity trading, one must learn to be pliable, to adjust quickly. Commodity trading is a constant exercise in adjusting to whatever happens. Nothing ever seems to develop exactly as expected in price changes. We are dealing with the reactions of man, not with a science. Whatever happens in commodity trading, as in life, by the way, I want to jump back on that. We are dealing with the reactions of man, not an exact science. So that kind of goes with getting the idea right. Get on board if you've got the idea right. Holding to the exact tick or an exact science or an exact thing like that. I think there's time and a place for that, but I also think that you're dealing with reactions of man, and as you mentioned in the weather chapter previously, things don't always play out the way you think, or to have that predictability that it's going to go to this measured move or it's going to do this retracement. So anyway, whatever happens in a commodity trading, as in life, one must keep on going. There is a certain amount of disappointment that all must take, and there is no use getting upset about it. There come a time when you have to face hard facts and be able to take things as they come. The successful trader develops the ability to take what comes, meets it calmly, keeps his mental processing operating, and does the best he can. St. Paul learned to be content in whatever state he found himself. He drew on the deep sources of philosophical understanding, as every trader must do if he wants to adjust quickly to the price moves as they occur. In our business, we are always looking for the greatest opportunity. One cannot do anything about yesterday. When one door closes, another door opens. The greater opportunity nearly always lies through the open door. All right, let's go one more here because I don't have a whole lot on my notes here tonight. So we'll do one more chapter here. Trade selection. Should all traders be encouraged to buy wheat if the evidence indicates a rising market? Most brokers mistakenly think yes. The truth is, some should, some should not. In commodity trading, one man's meat is another man's poison. To get the right answer as to who should be encouraged to buy, one should ask the right questions, such as how much risk is involved? Is the trade a part of a campaign or is it just one trade? What effect will a loss have on the will of the trader and on his power to trade? Is there a better trade now or later for this trader? Is the trader able to watch this trade closely? Is the trader, by nature, pliable or rigid in his trading habits? These and other factors make such differences in the answer to the question, who should be encouraged to participate in each trade that becomes available. The ultimate in trade selection is to match the character of the trade with the character of the trader. Classifications of trades and classifications of traders helps us do this. That is so true. There's, we've talked about Buddy's ability to sit through, hours of a trade being against him just to have it go in his favor, and that works for him. And he's, I don't think he's exactly content if the trade works right away. It has to go against him for him to feel good. But some of us others, we want it to happen immediately. We want to, we want it in the next candle. If it doesn't happen in the next candle, then by golly, we're getting out. So interesting stuff there. All right, guys, we will pick up with the deepest secret oh no, actually next week I will be gone. I'll be gone all week down in Florida. So on a little bit of vacay, well deserved and long overdue vacation. So we will follow up the week after that on the book there. So let's back here. Okay, so on the daily chart here, we did come down here and bounce off this 20 period moving average. So this was also a wide range 7. It was the pretty large move today. Even if there's additional downside on Friday, we keep in mind we've moved fairly far and we kind of did a range expansion today with that wide range 7. I do have tomorrow as a possible buy day. That could come in the afternoon. If for any reason, like on a longer term, one of Linda's daily pattern things is if for any reason we were to go down and take out today's lows and then the price were to move back above today's lows, that would that would trigger a long setup or a long play into the weekend, carrying over into Monday. But we'll see what happens there. Like I said, we've had a pretty good range expansion there today. Nice 3-day move down. The 2-period rate of change down here. You can see that from yesterday to today, we barely moved down that 2-period rate of change, which is again kind of supports a potential for buy opportunities. Again, doesn't mean we won't come down and eat into this tail some. And like I said, I'm open to we could take out that low. But if we take out that low and then move back up into that, then I want to be long biased going into the close tomorrow if that were to happen. All right. Hey, by the way, great job, buddy, on the noting that the back-to-back sessions, typically you don't have more than 3 back-to-back sessions of trend down. It's good to know that not all my pearls are being wasted and trampled under hoof. That you listened to that and you took your play, you took your setup when it presented itself, and that proved very profitable today, rather than like, oh, hey, just keep shorting this thing, keep shorting it, because it opened up and we started shooting down pretty fast. So kudos to you on that. All right, so let me pull over my 60-minute chart. Oh my goodness, my stuff gotten all messed up here, so hang on, bear with me. Well, this is ridiculous. It's showing everything as a copy. I had a glitch earlier, and so it's kind of messed up everything here. So come on, good thing. Okay, so on the 60-minute here, we did have we had kind of range expansion down into here. You see all these other 60-minute candles, how they're smaller candles. We've started getting a little bit of range expansion here. Did the first flag, a little bit of range expansion here, second flag, trickled down, and then we hit this range expansion. Well, now that we've hit that range expansion, you can see that we've got some pretty big candle overlap here. So that could open us up to some price overlap here tomorrow. I'm not expecting just an immediate up or an immediate down off this. Again, I want to be open to it if that does happen, but these candles have really expanded in their range here compared to, since way back on the FOMC, that was a pretty big candle there. Had a couple of big candles here, but all the other ones have been pretty small hourly candles until this afternoon or today here. So that again, we could have a little bit of chop on Friday here. The internals, they're on a different chart here. Okay. On the VIX here, this morning when we opened up and started shooting down right off the open there, we actually opened up with our VIX up around the 1733 or 35. So that did support that initial shoot down before we started getting a little bit of capitulation or divergences down there. So that was interesting. We did that, shooting up in that VIX on that opening. Then the price started coming, or the VIX started coming back down under that 1733. Again, that 1733 is based off this prior low here back at 1433. Supported that move down this morning here. Sorry, hang on. Yep. So that was all on the VIX there. So right now, obviously we start moving back above that 1733 on a consistent basis, then I would be short-minded on that as well. But for now, that looks like that played its card so far here. All right, on the SPY, I had yesterday that regarding today that we could move down towards this bottom here. I was short-minded if you listened to the video at all. Said I was still pretty short-minded today coming into today that we would have further continuation down. That did play out. We got close to this lower band on the channel that we've been channeling in. So again, we could come back down, play down towards this lower band a little bit here, or we could see a move, kind of moving back up into there. We did leave a gap, unfilled gap above here as well. So whether that gets moved into tomorrow or not until next week or, a couple weeks from now, we just want to be aware of that. So, all right, that's all I have today. VIX, the SPY. Yep, that's all I have. All right, that'll be it, guys. And again, I will be in the room for a little bit in the morning. Jonathan has got some match tomorrow. He's not doing an MMA match, but he's going against a bare knuckle fighter in a jiu-jitsu match. So that'll be interesting. But keep you guys informed. I should be in the morning, and then not until the following week. All right. See you guys tomorrow. Happy trading, safe trading. Let's continue to help one another out when you can be there.